Welcome everyone. Thanks for joining the last talk of the day. Appreciate it's late in mainland Europe, so thanks for hanging on. Yeah, I'm James Fair. I'm the co-founder of Connected Data. I co-founded the conference back in 2016, and it's been an immense privilege to kind of work within the community and help contribute to a thriving community over the years, and hear many different kind of use cases on how people are using graphs and connected data. So yeah, myself and George were discussing around perhaps sharing a little bit around what we get up to as part of our day jobs when we're not trying to organize events. So yeah, I thought I would share some information about what I get up to with my consulting business, Neural Alpha. So yeah, here we're here to talk about graphs in sustainable finance. So maybe kick off with a bit of an introduction. James Fair, who am I? It's a good question. I've, I guess, spent my career working at kind of the intersection of data and finance. So spent kind of 15 or 16 years working both within the buy side of financial services, working for mutual fund managers and hedge funds, but also on the sell side. So having worked for many of the world's largest kind of retail banks and investment banks. Started my career at a company called Reuters, who then became Thomson Reuters, who then became Refinitiv, and then spent quite a long time at Man Group, where I was head of data. I guess how did I get into connected data? It was probably around kind of 2010, I guess. I probably took, I guess, a reasonably conventional route into this space. Started kind of getting interested in the semantic web, and got some exposure to FIBO, the financial industry business Ontology. Got really excited, downloaded the Ontology, tried to load it into Protégé, blew my laptop up, and that was probably what kind of started a multi-year adventure for me. So in terms of Neural Alpha, we're a consulting business. We're around 3 years old now. We have 14 staff, including myself. Under normal circumstances, we're based in Kennington in London. And we're, I guess, a kind of reasonably diverse team of data scientists, data engineers, back-end developers, front-end developers, data visualization developers. And what we specialize in is building software, particularly software that leverages graphs and kind of network visualization technologies for the financial sector, and particularly the sustainable investment side of the financial sector. So we do a lot of projects for both the financial industry, but also for in the non-profit sector. So we do a lot of work on for NGOs on projects such as Trace.Earth, which some of you may have heard me speak about in the past, but also some other projects which I'll touch on a bit later. In terms of our tech stack, we use all types of graphs. So we do a lot of work both on the RDF side and the label property graph, which I think George and others were touching on earlier. But we also work with a lot of other database technologies. So we do a lot of work with NoSQL databases. We generally build all of our applications in AWS. So we do a lot of work with things like DynamoDB, for instance. Most of our API development work is done using GraphQL. And we even do some work with relational databases as well. Okay, so I guess my talk being the final talk, with the last two talks having been, I guess, reasonably technical, I'll probably pitch this at a reasonably high level. So I'm not going to be getting into too much of the details around the differences between ontologies and knowledge graphs, but interpretation and often means many things to many different people. So yeah, sustainable investing, if you Google it, you'll often end up with quite kind of rose tinted images like this on Google. People have kind of notions of trees growing out of money, which I guess there is some truth there. So is it a new thing, sustainable investing? Not strictly speaking. So it has its origins back in actually the 1750s with things like the Quaker movement, shunning earning investment returns from things like slavery. In more modern periods, we've seen kind of different terms used to describe sustainable investing. SRI investing is one term that kind of came about, became very popular in the 90s. Socially responsible investing, that stands for, which tended to be the kind of start of portfolio managers screening out of their investment universe, investments like tobacco and fossil fuels. There are also, I guess, investment strategies that would be considered sustainable, which are very focused around particularly the social end of sustainability. So things like microfinance and impact investing, where it's very focused on kind of measuring outcomes, positive outcomes. But probably sustainable investing is the term it's most equated with at the moment is ESG investing, so environmental and governance investing. And this has really taken off a lot within the last kind of 10 to 15 years. So currently ESG as a segment within the fund management industry is actually the fastest growing segment of all segments. So it's grown by the number of funds by 80% since 2012 to over $1.8 trillion in assets. And a lot of that's been driven by a few trends. I guess one of them is demographics. So we're seeing a lot of new millennial investors starting to save for the first time. They tend to have kind of stronger views, I guess, as we see, on social media and in the news on ethical issues. I guess another trend that's driven it is the kind of view of systemic risk and, the risks that climate change poses to the investment world. So we're hearing a lot of investors starting to talk about concepts like stranded assets. So, these assets such as coal mines and other fossil fuel investments, which will essentially become worthless in the future because they can't be monetized under any kind of warming scenario. We've also seen things like institutional investors begin to stress test portfolios for how they'll perform under different warming scenarios, and finding that often they don't perform. So these are some of the trends which have really driven ESG investing in recent years. I guess drilling into some examples of the three kind of pillars of sustainable investing. Kind of social side of ESG tends to focus on issues such as, for instance, the relationship between the workforce and society, working conditions, labour rights, diversity, community relations tends to be a very important one. Governance, so the G tends to focus very much on things like corporate governance, things like executive pay, how companies are legally structured, how transparent they are, how much tax they pay, and so on. I guess in this talk, I'll mainly focus more on the E, mainly because that has tended to be the area of sustainable investing where we've worked more in applying graphs. Yeah, so in terms of, so I guess starting with, sustainable investing is partly about adding good things into portfolios. So adding, things like decarbonising investments into, things like renewable energy into portfolios. It's also about screening out bad things. We talked about positive screening. You also have negative screening. So it's actually harder than most people would think for the financial community to be able to try and exclude things from their investment universes that they can look at. So a lot of the focus has gone into trying to exclude carbon intensive industries over the years. How that's tended to play out is through a kind of variety of ways. Investment managers tend to develop things called exclusion lists. So if you go and look at, for instance, the Norwegian Sovereign Wealth Fund, they have an exclusion list, so a list of companies that they deem as, unethical to invest in. And this spans things from, fossil fuels to nuclear weapons to landmines and cluster munitions, all sorts of areas. I guess when you're getting to the point where an investment's been excluded, there's usually been a few kind of levers that managers have tried to pull before they've got to that point. So engagement tends to be the first one, where managers will look to engage companies on particular issues. They'll look at whether companies have very strong policies on issues. They'll try to work with those companies. I guess the next stage tends to be voting behaviour. So they may choose to vote against the board or the company on particular issues. And then eventually, if they find that they're not being cooperative, then many asset managers will then look to exclude these companies. And as I said, traditionally that's tended to happen in things like the nuclear weapons space. But it's increasingly moving on to agriculture, and particularly deforestation, which is or deforestation associated with food supply chains, which is one of the areas where we focus on a great deal. So deforestation. Traditionally, when people think of deforestation, they tend to think about industries kind of directly using, timber, things like pulp and paper and timber, lumber producing companies. Actually, a lot of modern deforestation is driven by our eating habits, effectively. So driven mainly by soft commodities, so particularly things like beef, particularly in Latin America, in Brazil, Colombia and places, is actually the number one driver of deforestation, swiftly followed by soy, which is high protein animal feed. And then there's a whole host of other commodities. Obviously, palm oil tends to be one that gets a lot of press, particularly in Indonesia and also Malaysia and other parts of Southeast Asia. But there's a whole host of other commodities which also drive deforestation. So you have, even things like cobalt and mangrove deforestation for shrimp farming is quite prevalent. And the statistics are pretty shocking. So in the Amazon alone, there's a football pitch cleared every minute. And in 2018, that equated worldwide to a forest loss equivalent to the size of Belgium. So it's a pretty huge issue. just to kind of, I guess, add some additional color to that, I thought I'd share a screenshot of one of the platforms that's quite widely used in this space, the C4 Atlas. So this is a part of Borneo, Kalimantan, where we can see kind of some of the palm oil concessions, and then the red dots are palm oil mills, and then the kind of red areas are fires just in 2019 alone. So this is kind of one relatively small area, but yeah, it's pretty quick to see kind of what the impact can be. So yeah, so essentially, what are we trying to do in a lot of our work? Well, what we're trying to do is link investors to deforestation on the ground. So we're linking investors, so both big name pension funds and banks that we all work with things like the red dots on the screen that we see. This is actually a surprisingly difficult thing to do. So in the age of kind of real-time monitoring, use of satellite feeds, we can see where this deforestation is happening, almost in real time. And we know a lot about the companies that own these different concessions, so these black boundaries around here. But it's often quite a difficult question to answer, who finances them, and, how we contribute to that. So I often find that this diagram is quite a useful diagram for explaining, I guess, why it's hard, and the use case behind graphs, really, the power of graphs in this space. So we think about the links between the food that we consume and the deforestation on the ground at the top of this funnel. You have many small scale farmers, often in these commodities, or many disparate companies. That then flows through a process down to a relatively small number of commodity trading companies, and then back out to a very large number of food and consumer goods companies. So I guess it's a relatively straightforward process at each of those levels to identify, who owns these assets, who owns these concessions, who their parent companies are, and that kind of stuff. But then when you start to add in financing as a dimension, it pretty quickly blows out the complexity. So you can see then, just from an ownership perspective, you could have many levels at each of these levels. And then at each of those levels have, many different connections and levels with different types of financing coming into these structures. So, things like loan financing, revolving credit facilities, bond issuances, also equity financing, which will be, the route through which I guess most of our kind of pension fund money and ISAs and that kind of stuff will flow into these areas and contribute to deforestation. So through, the passive and active funds that we hold with people like the BlackRocks and the Vanguards and many other household names in the world. So what I thought I'd do is kind of give a quick skim through a few examples of how we try and break this problem down. So on many of our projects, we build up these very large networks of links between these companies. And what we try to do is see if we can distill these connections and this complexity down to usable tools for, I guess, different segments of society. So the tools that we build, tools such as Trace.finance, which I'll touch on a bit later, and also other projects like Lucida and Orbitas.finance that we work on. We build different screens, different widgets, different functionality for different users. So some of those users may be people like campaign organizations that are doing research into these companies. Other users are, for instance, the loans departments of banks that are assessing the risk profile of companies that are looking to take out credit. We also do a lot of work building tools for things like portfolio managers and people on the asset management side of the spectrum who are looking for candidate investments and want to understand what kind of deforestation risk they own. So in this case, this is an example of how it's a relatively simple network for how we present the indirect deforestation risk that companies can have. In this case, we have an Indonesian biofuel company which doesn't actually have any deforestation risk that we've been able to identify itself, but it has directors of those companies who sit on the boards of other companies who do have deforestation risk associated with them. And this is actually, or has been to date, it's quite a simple example, but it has been quite difficult for many investment managers to do this kind of analysis. I guess where we find a lot of interesting patterns, and I guess where we repeat that type of analysis on a slightly bigger scale is looking at entire sectors. So particularly areas like the Indonesian palm oil sector often have very elaborate ownership structures. They have a mix of kind of onshore and offshore companies, many different directors typically involved. I think this is a great report actually that kind of summarizes some of that stuff well by Greenpeace, where they've done a bit of a report on Wilmar, the world's largest palm oil trader, and some of their connections to a more controversial group of companies called Gamma Plantation, or KPN Plantation as they're known now. We start to see these connections whereby there are not necessarily formal legal relationships between Wilmar and Gamma, but we see many of these indirect relationships through family relations and connections to politically exposed people and this kind of stuff. So this is another example which I pulled out where we use graphs to traverse ownership structures. So typically ownership structures often tend to be quite simple. We typically use a lot of, I guess, relatively simple hierarchy visualizations, such as this visualization here, to try and show, ultimately who is in control of these companies that are responsible for deforestation risk. This is actually the legal structure of Chinese state-owned companies. So we have a particular commodity trader, COFCO, which sits within this structure, who have a subsidiary, COFCO Brazil, who have soy deforestation risk associated with them. So I think it's quite a good summary of where the power of graphs comes in. So this is just asking one question. So who ultimately owns and controls is ultimately, I guess, responsible for any deforestation risk that this company generates. And you can see it, it's not a simple question, and particularly when you look at the risk that may emanate from sister and brother companies. If you're, for instance, a loan application reviewer in a bank, it can pretty quickly become very complex. So thankfully, we use some tools within the network visualization space. We use a lot of simplification methods. So this is one visualization that we've built to try and show the deforestation risk that particular subsidiaries within a group bear. So we can see the subsidiaries, the high-risk subsidiaries highlighted in red, flowing up to the ultimate parent entity, in this case, Bunge. Bunge is actually an interesting example. I guess it's kind of like a mid-sized company in terms of legal structures. They have over 300 subsidiaries. And what we typically tend to use is to simplify those visualizations is things like kind of grouping techniques. You can see the nodes counted up, for instance, to try and simplify this visualization. So what have we touched on? I guess we've touched on kind of connections, board connections between companies, between people and companies. I guess we touched on the previous slide, the connection between assets in companies and people. We've touched on legal structures. So these are obviously all different types of connections of different lengths. Where we start to really add a lot of power, both for civil society with the tools that we build, and also the investment community, is when we start to combine this. So I thought what I do here is show a relatively simple example of where we're combining those different types of traversals and those different data inputs. And I guess that's perhaps one thing that's worth touching on is where we source this data from, typically for projects in a moment. So what we can see here, I guess, starting from right to left, what we were asking with this question was, okay, for the Cerrado, which is a frontier region of Brazil surrounding the Amazon, which is a place where a lot of soy and beef deforestation is emanating from. How are BlackRock connected? Give me a simple path through which BlackRock are connected to deforestation, which is occurring in this area. So what we can see, kind of following it from right to left, is we have a number of different BlackRock subsidiaries who hold shares in BNP Paribas, the bank. BNP Paribas lend money to a company called Marubeni, and Marubeni have a subsidiary called Gavilon, which are a commodity trader operating in that region, who acquire this deforestation risk through the relationships that they cultivate within their supply chain, so the regions that they source from and the companies that they deal with. So it's a relatively simple example, but quite a powerful one, really, for connecting the types of investments that lots of us have here in the West with deforestation that's happening on the ground in Latin America. Quickly, I'm conscious of time. We've got a bit of time for questions. Might be worth touching on, I guess, why we use graphs, given the types of data that we work with. So a lot of our projects tend to be very data integration centric. So we integrate predominantly a lot of structured data from things like companies' house registries, tax offices, legal entity sources of data, import, export, documentation. We also do some extraction of content from unstructured data, so using things like natural language processing and those types of techniques. And graphs are really, an incredibly flexible data model for managing that complexity around data quality. So as soon as you're dealing with 10 plus sources, global sources with different standards, curated by humans, you're going to find discrepancies and disagreements. So graphs are a very good way of integrating different sources, retaining provenance, and I guess achieving some kind of consensus at the end to be able to achieve these types of insights. And then that's pretty much the end of the talk. It's very fast kind of whistle-stop tour. Perhaps before I get on to a bit of information about or the standard kind of we're hiring message. So I briefly touched on 3 projects that we're working on in this space. So we have Trace.finance, which is a platform that we're building, which is launching in September. We're also a partner on the Lucida project, which is a project focused around understanding the ownership structures and the financing of commodity producers. Trace Finance is more focused around commodity traders, so the kind of middle of that hourglass. And then another project that we're involved in is a project called Orbitas.finance, which is very focused around the response of the financial industry to climate risk from food production systems. So particularly looking at stranded asset risk for sectors like palm oil and beef and so on. So I guess we have the customary we're hiring statements. Are always looking for smart data engineers and other people who have an interest in this space and a kind of graph fluent, or preferably graph and finance, if not sustainable finance fluent as well. And that's pretty much the end. So I'll switch to Q&A. I think we've got 5 minutes for questions, if any have come through. Just say, I'll move back up to the top.
James, there are a few questions. If you just look at the chat.
Oh yeah.
Bottom right. You can start from there.
What was the name of the platform showing the map? C4, so CIFOR. So if you type in C4 Atlas, just lost the questions. If you type in C4 Atlas, you'll be able to find that. And there are some other similar platforms. So Global Forest Watch is another very good platform in that space, where you can look at, real-time deforestation from satellite imagery. How is graph technology helping capital markets and portfolio management? So I guess it's still a relatively emerging area. So I guess if you look at finance as an industry as a whole, graphs have typically been employed for things like recommendation engines, for financial crime, anti-money laundering, that kind of stuff. I guess the type of sustainable finance work that we do has some synergies with that type of work. But I guess it's still a relatively emerging area, relatively nascent. And there was the next question was, is there a graph? Is there a link of the graph you're showing? Can anyone invest with you? If you send me a personal message, I'll be able to talk a bit more about that. If you go to, so some of the visualizations that I was showing were kind of sneak peeks of some of the work that we're doing on trace.finance. If you go to www.trace.finance, you'll be able to find that project. And there's a mailing list actually that you can subscribe to get access to that when we launch in September. All of our projects that we're involved in, we have links on the neuralalpha.com website as well, if anyone loses any. After the a little bit about tooling with data formats, usual tools. Yeah, sure. Yeah, I'm happy to have a chat about tooling. I guess generally a comment on tooling. I mean, for a lot of these particular projects, we tend to use a lot of label property graph, mainly because we find it a bit easier to work with. We can make, I guess, some semantic compromises with the data that we're modeling to get, for instance, benefits around performance for traversals and those types of queries where we have particularly long paths. as I said, generally we use a mix of different graph technologies for different requirements. So yeah, happy to talk more about that. Hard to imagine use cases and sell those to paying customers. I guess the use cases are growing in interest. So I guess as the as awareness has increased around the different warming scenarios and the consequences of those and what's required to start hitting those scenarios, particularly we've seen a lot of interest in non-kind of fossil fuel applications for this type of technology. So we're starting to look a lot more at areas like, I've touched a lot on agriculture here, but also things like plastic waste. Investors are becoming very interested in. Also geospatial applications around things like biodiversity loss, impacts on biodiversity for these particular types of investments. There's a lot of interest there that's developing as well, and some projects that we're involved in. How do we bring real-time news feeds to Ontology in order to derive knowledge insights? Yeah, it's a good question, and not an easy one to answer succinctly, if I'm honest. So this tends to be an area where we tend to use more kind of technologies at the semantic web end of the spectrum. So we do a lot of things like SCOS taxonomy development and use that for doing kind of custom tagging of news stories and other unstructured sources, using terms that are specific to the types of deforestation, for instance, that we're interested in. I'd say it really depends on budget, really, and I'm often surprised at how good the results can be, even through using basic taxonomies and not particularly sophisticated kind of machine learning techniques with NLP. But generally, yes, to try and scale and do things in real time, then you need to start really using those kind of more sophisticated NLP packages and techniques. And there was a question on solar projects. So yeah, we haven't really done much work in solar projects. It's one of the first sustainable investment projects I actually did was working for a hedge fund, one of the largest renewable energy investors in Europe. So we did a lot of solar and wind kind of analytics there, but yeah, it wasn't quite the same use case. So we weren't using graphs. I was doing a lot of work with relational databases actually on that particular project. So yeah, lots of different horses for courses, I guess. Yeah, and I think that's the end of the questions. So yeah, conscious we're slightly over on time, but if anyone's interested in talking further about any of this, then yeah, please do ping me on the Neural Alpha website, or I think we'll be sharing our contact details afterwards. And yeah, and please do have a look at neuralalpha.com if you're interested in any more information about what we do and the projects that we're involved in. And yeah, huge thanks for listening, and yeah, big thanks to I guess to our sponsors, Primhill Computers and their Servol tool. Big thanks to them for supporting this event. So yeah.